Okay, today we start the 14th lecture. First, we'll cover the presentation and then we'll go through the practical side on the SAP server. So what we're going to do, we're going to assign a purchase organization, company code, then to a plant. And then we are going to create purchasing groups. Purchasing groups are meant to supervise and oversee the purchasing of various material types like raw materials, semiconductor services, finished goods, and stuff like that. Then we have material groups. Material groups again, as you can understand the various material groups will be there. Under material groups, there can be raw materials and finished club together because it will be related to material types, like we have metals over here. And then we have company codes to maintain material management, where we will set the year, then we'll save it, and we'll also allow back posting, which is necessary. Okay. Now, attributes, material types. Now, what are material types? Material groups and material types. Material types will be related to material groups. Each material group will have its own segment for raw materials, semi-finished and finished. In material types, we have finished goods like per. This is the code in SAP, which is defined for finished goods, and we will update their quantity and value. Features to be updated whenever there is a movement of material in the books. We will also configure our values for material, and we will update its value and quantity whenever there is a movement of materials of any material type. It will update the value and it will update the quantity every time. Some material, of course, they do not require quantity or value, of course, not updated like free materials or competitor products or experiment products. Now, how is basically simple. Okay, work is packaging. Okay, we'll also update this one as well. Then we have tolerance limits, where we will actually set whether what will be the upper threshold and ceiling for the company codes, basically whenever there is purchase order that is being generated, so the value should not exceed a certain limit that we have. We have tolerance limits for quantities also. Okay, plant parameters will enter these plant parameters. Then number assignment. This is of course a one-time activity every year. Okay, for every year we have to have number ranges for the material documents that will be generated under these document types. Okay, and these will actually use these number ranges to generate material document numbers. Okay, so you have all the steps over here, and we maintain all this. Then there is tolerance block. Again, as I said, there are tolerances that are to be maintained. Okay. Okay, default values. Then we will also define default values for then automatic status that will be kept blank. We'll see what this is. Then we will group together valuation areas. What is valuation in the plants? Okay, valuation area will have its own valuation one segment. Then we have valuation classes. Valuation classes are used in the material cost review. Segment various material types for every material type in the valuation class. Like raw material 3000 images by default is handled, maintained, and followed in the present SAP practice in the industry. Then, the FI consultant's job is to create inventory raw material GL accounts. We'll have this GL account to be made, which will be a balance sheet account under the assets, inventory, raw material. Only input tax will be allowed, and without tax, postings will be allowed. Field status book will be material. Okay, material account and okay. Material accounts, and it will be posted automatically whenever there is a material movement to GR in these accounts will be automatically. Creating GL accounts again for inventory finished goods. We have first for raw material now. Inventory finished goods. We'll select raw material, copy it for finished goods, and we'll copy all the features. And we'll move ahead. This is because we have slides which are more than 25, that's why we are moving a little faster. Then we have semi-finished goods, and we'll do the same, and we'll create semi-finished goods account. The GR ANR account will be created where we will copy the trainees account. Okay, we will open item management and it will be sorted based on the synchronize or we can solve the database for the last one. Okay, what is very important for reconciliation? That is a point that you should remember. Okay, okay. Then of course, GR IR will have a different status group. Then we create the training account again with these settings. These settings are in the configuration manual that we provide for everyone. Then raw material consumption account will use the salaries account. Consumption is basically expenses. Okay, and expenses are basically used up within a set financial year and absorbed. Okay, and this is a free status group that will be used. Okay, SFG consumption is semi-finished consumption, and the same setting will be cost of goods sold without cost element, which is cost of goods sold is not a cost element. Again, salary will be copied, non-operating expense, and the free status will be changed in stock account. Next. Okay, sales revenue again not a cost element, and this will be the account increase in the stock account. Okay, so we'll use this and we'll copy and recreate increase the stock account and sales revenue account, and the free status code will be G030, which is change in stock account. Assignment of accounts. This is for FIMM integration OBYC, where we will be using transactions to integrate accounts at the back end. PSX is the transaction in MM for inventory posting. Over here, we will add inventory accounts for raw materials and finished goods and finished good. Valuation class, we've already discussed this. Valuation class, which is 3,790 that we discussed, is 3,000 for raw material, 790 for semi-finished good, inventory finished good is 7,920. Valuation class is picked from material master. Then we have transaction FR1, where we'll be using freight account and we will actually freight transactions. Then we have here IR freight account and we will actually get them. Valuation motivation, valuation class. Valuation class 3,790 for materials and good respectively. Sorry. Valuation class, valuation motivation, and then we have GDP. In GDP, of course, quantification of our transactions for various scenarios and various processes, and we have these accounts, and we add these accounts, and these accounts are already mentioned earlier in this deal account. 4 and 5 is raw material consumption. Here 204 increase decrease. 204 cost of goods sold. 520 is GR IR account. So VBR transaction is for consumption. PNG is material scrapping. This is GR without purchase order, which is very important. If you want to move material or want to update a quantity of material in any plant or stock, then we use this 501. Okay, and ZOB is an important transaction. Finished good delivery to customer. Sales account is not a revenue element. This is the transaction max. Sales account is revenue element. Product costing by sales order, cost of it will be sales order item and we'll use VAY. No product costing by sales order. A profitability segment will use VAX. Okay. Then number ranges, we'll create the number ranges. These are some of the number ranges that we'll create. Then we'll define account groups with screen layout for vendors, create number range for vendor accounts, assign number range for vendor accounts. This is a long step that we'll just see. And we will assign vendor account groups with numbering ranges through cross-application components that we'll see in the configuration. Okay, and these are some of the settings that we'll see in the configuration that we won't have. The notes are given. Managing fields, if required, we'll define account groups. So there are valuation types that we will have to follow in S4HANA for material ledger. There are various approaches for valuation for multiple valuations. We have legal valuation, group valuation, profit center valuation. 3 types of valuations are there. Okay, this is used for legal reporting. Group valuation is used for strategic reporting. And profit center is an independent element which can be treated as independent reporting center for profit and loss. Apart from legal pricing and prices, special type of prices called transfer prices can also be used to evaluate goods movement between profit center. If you want to use transfer price and profit center, material ledger is mandatory to be implemented. In corporate goods, of course, there are various companies. For example, there are 2 companies, A and B. This manufacturer sells cars and this manufacturer sells engines. So this is external sales and internal supply to another plant or another profit center. That's the view. So in company code, legal view, this is how the books will actually look. External, standard price 7,000. Cost of goods manufactured is 2.1 million. Sales quantity standard price is 9,000. Revenue is 2.7 million. Internal sales type, standard price 7,000. Cost of goods manufactured is 700,000. Sales quantity is 100. Price is 9,000. Revenue is 900,000. 900 grand as they call it. Okay. In company code A, which only sells externally, cost of goods manufactured is 7 million. Sales 100. Price 90. This is 9 million. Okay. Total revenue, which is 9 million plus 2.7 million plus 900,000. This is 1.2 million. Okay. Total cost of goods manufactured. This is 7 million plus 2.1 million plus 700,000. That is 9.8 million. Contribution margin legal will be 2.8 million. Okay. There might be some discrepancy, but anyways, we just want to understand. Group view. Standard price 7,000, 7,000 external internal. Manufactured cost of goods manufactured is 2.1 million, 700,000. Sales quantity is 300, 100. Price. This is external price and internal price. 9 and 7, 2.7 and 7. Company code A sales, group view, external 6.8 million, cost of goods manufactured, sales 100, 90,000 is the price, 9 million. Okay. Total revenue is 9 plus 27, 11.7. Total cost of goods manufactured is 6.8 plus 2.1, which is 8.9. Contribution margin is 21. Over here, the contribution margin was 0.8, it is 2.1 here, so that is the difference of 700 grand. Okay. So, currency and valuation profile can have 3 valuation approaches like below. Legal will be company code currency. Group will be 30. Profit center will be 20. Okay. Valuation view 0 is legal, 1 is group. Profit center is 2. Okay. Let's go to our configuration. And I'll do the configuration a little first. Let's see the server actually hold over. It was idle for some time. It was stopped. Okay, it's working. So that will actually save us time. Okay. I will actually follow the steps and I will not comment anything while I will do the steps. Okay, purchase organization to company and to client. Structure, assignment. account company would have been assigned already, which is org 2004. Oh, okay. 501. Choose the groups. Choose your value purchasing create. Okay, well, okay. Today, the first part was, of course, without the voice because it was quite straightforward, and that was regarding the tax accounts, the tax codes, the tax determination, and the integration with taxation of the codes with GL accounts. So that is pretty much finance side integration. We've already shown you the steps. Today, what we are going to do is continue from where we actually stopped. And we are right now in sales and distribution node where taxation rules for some tax codes will have to be implemented and engaged. A part of those tax codes have been already executed and configured in this part. So we are going to introduce and define another part of that. That is where we are going to continue it from. And we are waiting for the server to actually respond and come back. And it's usually taking a little bit longer, but this is what we are trying to achieve here from sales and distribution. The tax category with it, that is MWST, which is taxable. Okay, and we make it taxable, and then we make it taxable again, immaterial taxes. So waiting for the server to actually come back, but we'll just discuss what is ahead. Then comes the MM question. This is very important, although the MM consultant usually does that in a live project, but for understanding, the FI consultant should know how the integration is usually done. So logistics, general and node, we actually have where we actually define. I'm going to be defining quite a number of ones here. Okay, our server is still actually responding to the configuring this tax part, and we move forward to the next one once the server actually comes back with us. And right now, I just want to show you how taxes and tax rules are defined in SAP from the sales and distribution node. So that's where we are right now in SAP. So we're waiting on SAP to actually respond back, and it should take some time, I believe. And if it does not, then we'll relog in again. Okay, so MM integration, let's come back to that. We'll create some plans. Okay, and we'll create like 5 to 6 plants for our IMCO entity. Okay, so these are all the master data that we are using right now. Then we define a division. For the division, of course, we have the configuration path already given here. That's the storage location, and then we have some location for other plants, and most of it is basically covered and covering the master data for plants, configuration, divisions, okay, and the assignment with the company code. So you will actually understand how it is actually done. It's pretty much straightforward, way of this, quite simplified. SAP is not that very complex, okay, and you will actually get a hang of it when you practice it. Practice is very important. Okay, taxes, define tax determination. Two rules, and over here we have AE, okay, and okay, we just copy this, copy as. Let's see what all options do we have. We need double click on material taxes. Okay, next is back button, double click on material taxes. Material taxes, where do we have the regional codes, delivery plans, master records, tax relevancy. Tax relevance materials. Okay, and we have tax category. WST 1 taxable, okay. Non-taxable, okay. Okay, we have MWST, MWST no tax, full tax, half tax, no tax, no tax. So these are kind of the rates that we actually can use for tax calculations and tax deductions. Okay, so that is done, and next, of course, we'll go ahead. This is a bit technical, but of course, these are new concepts, so it's okay, you'll have to practice it. Now let's define a plant, head of a plant. Enterprise structure, definition, and logistics generalized. 5 plants. Define plant. Okay, over here, NP 1, and what we say, can I find 01? Okay, new entries, final 01. IMCO, Dubai plant, DXB, IMCO, okay, enter. Okay, address, company, IMCO, IMCO1, IMCO1, IMCO, okay, country, AE, okay. You know, Hyderabad city, okay. Name 1, Mumbai, Mumbai plant. Country. Okay, company on M02, okay. Then we have region 13. Okay, we're not so concerned with the regions. 3. Okay, IM03. IMCO launch IM03. Back. Launch. Control Y, Control C. Next entry. Company. Okay, AE. Okay, this was LP3, and we've already done IM03. And we go to the next channel. 5, 7. Okay. IM05. Okay. IMC. Project plant. Project IM05. Okay. Copy. Next entry. Company. Okay. And then we have 07 belly. Okay. IM07. Out. Let's say 7. Control Y, Control C, next entry. Okay, then division, small cars. Okay. This UAQ is almost quick. And we will just skip this by pressing F12. Okay, so we have like 5 plants. 1, 2, 3, 4, 5, 6, 7. Save. That we have created the plans and we saved it. And if you want to see what plans did we configure in the last step, because now we're going to proceed with the division configuration. Now division, as you see, is your product division, like chemicals, detergents, soaps, hand wash, these can be your sanitary, these can be your divisions. So first let's see the plans that we have created. We created like 5 of them, and we go to define plant. In define plant, we go to IM01. This is IM01, Sharjah, Iraq, Fujairah, Kuwait. These are the 5 plants that we created in the last step. Okay, next is the division. Okay, we create the division and it says small cars. Okay, and new entries, less IMs. It's already there. Like this. Next step is storification, and saved. We go back. Storification, configuration, launch IM01, and second. So what we'll do is create shorts. What we do is Control Y, copy the file, copy the Control Y, align, drag and right, Control C, copy, save. But we'll then replicate this the same for all plants. Okay. So this is plant dependent items. New entries, save, save. Okay. IM0305 and 07. So we replicate the same code. So it basically gets more congruent and synchronous as all the same for all the plants. Same. So So the code remains the same. And that's how we actually define organizational units. That's how we plan the layout of the organizational units. Okay, so that following and understanding the organizational setup is not difficult for the business, for users, and for the users. Okay, so we can actually skip every of these. Okay, so we made it easier. Okay, now maintain purchasing organization. Okay, we go for purchasing part, which is this. We keep one central. It's only 4 characters. Okay, so we'll purchase. We keep one central list. Okay, sign plan company code. Okay, that's the next step. We define it, now we assign it. Plan to company code and new entries. IM0, IM01. IM0, IM02. IM0, IM0, IM07. Okay, so company code basically is at a high precedence. It will actually control multiple plants, and these multiple plants will report to the company code. Okay, and give us a so that is it for today's session. And we'll be back with more. We'll be now going for FIO integrations and some front-end activities for material, for finance, and we've already seen the finance. Now we'll be looking at much more logistic details and entries, and that will of course add to your learning journey. And we are now proceeding towards product costing in the coming lectures. Thank you much.